Welcome to the very first episode of the Order Trading Masterclass. This series is all about helping you trade smarter, read the markets better, and understand how the pros think. In this episode, we'll be covering the 6 key foundations, starting with how to read the basic market structure, how to navigate live markets, understanding order book depth, and how to read and react to news, and the difference between announced news and what it actually does to the market. And finally, what time zones should you be trading on? If you want to skip ahead, there's timestamps down in the description to revisit specific topics. By the end of this episode, you'll have a strong foundation, how to read markets with more confidence, and in the next few episodes, we'll be diving deeper into more advanced trading concepts. So grab your charts, get comfortable, and let's kick off the first order masterclass, brought to you by the one and only Skew. 2 or 3 of your go-to patterns, use that as a whole tactic to read the market.
Is you have like your impulse move, right? That sets the high. And then this comes to like just reading raw price action. Like you can go and like Google like dojis. I think this one's it's a type of doji, which is a pin bar, which is basically the wick, like 90% or 95 or even higher. The wick is like just straight up, meaning the market's sold into that, and you get what's called absorption of the buyers, which basically means like all the buyers get gobbled up by all the sells, right? So there's a lot more sells there. And what that does is essentially changes the trend almost instantly. So clearly you get the candle, and then you get the candle thereafter, which breaks back below it. That's your like confirmation. So this is a solid pattern for being short, essentially, because you basically have like almost risk free in terms of setting like your stop loss above that high. And then you essentially just carry that trade, that short, all the way until you get a retest of the low, which is like here. So this is where you take profit basically. And then if you don't see a break of I would say this high or this consolidation, which you don't, even with this impulse above, which does run this high, it doesn't run the initial start of the breakdown, right? Which is around here. So this leaves you to, if you want to add to your short, you can do it here. And then obviously you carry that all the way down until you get, a noticeable change in trend where, before it is grinding lower. So price grinding lower over time. And then you see a more profound like low. Basically where momentum's lost to the downside and price just kind of goes flat, but starts to grind higher. Make sense?
Yeah, it does. Okay, so once again, just going back to that flatter price section, that's kind of your main indication of, okay, market's turning around, or it's time to get ready, or like get out of your
It's
positions.
yeah. So like when you're short and you see that, it's definitely time to take profit and move your shorts considerably down in profit, like usually above like a high like that. Simply because if a price gets above that, which it does here, that's your break in structure.
Okay, that makes sense.
Basically, yeah.
That makes sense.
Yeah. But then obviously you can literally just apply the same thing again, right? So you see your initial impulse here. Guess what? Price fails to hold it again, right? So then you see this consolidation here. This is where you get short. And then obviously it's legit the exact same again. Like you carry the short down, and then you get that higher low in terms of the previous low here because it's higher. And again, you get that basically just flat price action where like momentum's completely lost from the sellers and they don't make any progress lower, right? And then again, obviously you get this candle here, which breaks above the down candle, right? The breakdown candle, or quote breakdown. Then you get that mini consolidation. That's your invalidation basically.
Okay,
Interesting. And yes. And then also for taking longs, this is the example that I use a lot for longs. First being, you have your initial low, higher low has to be higher low, also has to have that, choppy, flat price action where sellers don't have momentum at all. And then the last is essentially, a high that is above the breakdown candle. That's it. Meaning, you can
Okay.
basically get in here. I typically get in on the flat price action, but I only do that because I'm experienced, so I know what I'm looking at. Um, in terms of having to cut very quickly, I don't really recommend that for like newer people. I would recommend the consolidation after breaking, like the consolidation, which is basically a high. So you can see this candle, like where my cursor is, it's higher than the breakdown candle.
I see. I see.
As, as,
Okay.
as well as that, this, oh shit, uh, this like hammer candle, it retests the actual higher.
Actually, what is the strategy called? What do you call this strategy specifically?
Um, I don't think it really even has a name. It's just like breaking market structure, really.
Okay.
It's yeah, like technically speaking, even though on 4 hour it looks like a tiny consolidation, right? Where it's like 4, 8, 12. It's about 12-hour consolidation, right?
Okay.
But which really isn't that much. Um, this could be called a higher low as well. So if we go to 30 minutes, yeah, on 30 minutes it's far more obvious. So you have like consolidation, right? Price
Oh yes.
retests it, yeah, and then it goes up.
Okay.
So
Okay.
this is the perfect confluence that I'm talking about, where you can have multiple different time frames, but it tells you the same story.
That makes sense. That makes sense. I think
Yeah.
what would be great is if we jump into like a real account and jump into the live markets and we test this strategy on there.
Okay. Yeah, we can go through a bunch of alts and basically see what we find. Um, yeah. So like this is pretty good. Like this is obviously 15-minute, right? All right. We have like that grind law from bearish price action. Then you have like this high and this low, which becomes a nice level, right? So like here, what I want to see is basically price retest this low. And that's essentially where I would personally look to long. So Andy, I don't particularly want to chase a weekend bounce that's already occurred, personally, but we can go through alts. Oh wow, a lot of the alts have moved quite a lot higher. Yeah, one of them could be XRP actually, because um it's made a high compared to these, but it needs a little more consolidation. But essentially, the idea would be, take a long around like 2.5 ish, like around here. It's like there, and then you would essentially, price comes back here, and you would target continuation. Um, and then you'd take profit essentially when price is trading around the breakdown consolidation. And then obviously on like leverage, yeah, just like for example's sake, um, obviously it depends how much you want to risk. I could choose like 25%, right? Um, this is more risky. I probably wouldn't do this, to be honest. Okay, well, that's kind of funny. I didn't actually expect that to happen. Well, okay, so I've entered 3 times, obviously way more than I should. But for demo's sake, right? Now that you've taken like a riskier position, do you want to see a continuation of this grind up price action, right? And then obviously move higher. This is like statistically much lower. And in terms of like managing your risk, you basically do not want to see price, basically trade below this consolidation again. So like, you can set a stop loss below here, or if you want a little more risk around here. So like, with like a position of this size, I guess, doing that. So set it at like 245. It'll tell me how much I risk. So that is quite considerable. For a 3% down move, right? You take like 276 as your loss, right? And say if you were targeting the consolidation higher, which is like 2.60, you can see you're actually risking more than you should be, right? So like comparatively, you don't make as much of a gain per se, right, to the amount you're risking. So this is an important detail when it comes to trading more degenerately in the market.
Yes.
Um, now if I actually move it up there, I love how you can do this with like these dexes now. Okay, yeah, now that makes more sense. So like now if we're actually targeting the top of the consolidation, we make almost 2 times. So yeah, that's
Okay.
what it should more likely be like.
Okay, so your risk ratio is kind of like 2 to 1, or how do you say? Is it?
Like 1.5 to like your return is 1.5 times the amount that you supposedly will lose. So
Okay.
I'm risking a loss of like 276 to make a gain of, what was it, 566. Assuming this continuation here, right?
Yeah.
Um, what I typically do is if I think there's going to be a move, right, and I want to chase a little bit, I take a position here, then I set my limits to around here, around this price. So I'll set, I don't know, just as example, 2.47. Yeah, the along appears. Typically, your best bet is you have like, you stop at the lows. And then what you do is you stack bids into locations of the consolidation low, which is pretty um respected when it comes to price action. Like respected as in like you have like these highs, this low, this high, this high. So when price retests it on the downside, it typically creates uh quite a tradable price point. Like what you want to see obviously is a higher low. And if you don't see that, then you just cut the trade pretty much instantly. Because you'll expect, this low to get ran, or even this low to get ran if it's a bearish consolidation. So again, that's like tangibly when it comes to trading, your like positioning, as in like where you enter a trade, matters a lot in the context of price action and structure.
Do you mind go a little bit deeper into the risk area, how you normally stretch it out, and like make sure you always kind of hit that target of your risk in is like obviously your 1.5, like how you got there.
Why you take the trade and why you take that amount of risk ultimately comes down to market structure. So like, what I did earlier, which was accidental with like the 3 longs, um, given like where price is, right? So, call this the bearish, I mean, I would say I'll actually just do this. So within this consolidation, right? This you have, the low, right? Then you have this, these highs, but this is actually bearish, right? Um, and then obviously it pushes back lower, but then you don't actually see like a retest of these lows or this low here, and price continues to grind up like previous lows, right? So now we have this consolidation, which is grinding higher. This is like a lot riskier, I would say, rather than being patient and basically waiting for price to, break up and then consolidate here, where you have a much cleaner point in terms of, setting a stop loss. Because ultimately that's like your risk management is your stop loss, right?
Yeah.
So you want it to be in an area which is really easy in terms of like not taking high risk or not taking a lot of losses unnecessarily, right? That's what you want to avoid when you're taking longs. And then for obviously shorts, you tend to take that more at the extreme point of the market, which is um like whoops. Why is it not showing me? Okay. Um yeah, so the extremities again is this high, the initial high. Price ran it, closed back below instantly, right? This consolidation is where you would limit in short quite a few times. And then in terms of like actually listing those orders, you'd be able to see this line on your chart, and then you just stack you know um the stack your like sell orders or your shorts right in a grid. In terms of like above this blue line, up to that 1 week, it's 3%, right? So you have like 3% room to basically get filled. Um, and then you would have to babysit the position a little bit, right? So this breakdown candle is really, really important, right? So you're starting to see movement with the position, right? So then you see that like bearish continuation lower, and then these highs, and it doesn't come back near this like resistance level, right? Super important. Um,
My main takeaway here is rather be patient. Like, wait until you want to open a position. Don't just like go full slam after watching like a tutorial how to trade. Like, respect the market, wait a bit, and then go into it.
well, yeah. There's a whole saying of like trend is trend, right? That's
Mm,
like as a saying, you want to follow trend.
mm.
So like currently we see a bounce in the market, right? Um, if we exclude the wick, right, and just focus at like the body, technically speaking, this would be a higher low, right? And if this is bullish, right, then the easiest longs to make will actually be a reclaim of these lows. So if I was patient, I would wait for like 2.7 on like XRP. So like it's where price closes back below, and then you'll probably see a consolidation. It could be flat, it could be a bit more vertical, but like that area is so much better to get positioned because you have such a clean level, which has already been traded by the markets. It's gonna be respected more by the market rather than like newer, fresh price action, which is a lot more difficult to trade. I hope that makes more sense.
Yeah, it does. It does.
I'm actually gonna like cut half of this because I think it's more likely to pull back. I have quantity of like 3,000, so I'll cut.
How much did you put in now? What was your position? I can't really see the screen really well.
Well, the marginal value, the notional is 8,000, so it's like quite a lot. I mean, a lot, but it's not technically a lot. The issue is actually cross margin because if you're using cross margin, you have to be a lot more considerate in how much you risk. Because with cross
Cross
margin,
margin.
it digs into your balance versus like isolated margin, which isolated means the amount of margin that you risk for that position is isolated to your balance. Like meaning if you like wreck that whole position, right? Then like it won't affect the balance. All right, so I put in a order to all right, so the notional's 4,000 now. So I basically just cut it, right? And as you can see, like obviously, uh not the best price action. You're seeing a lot of wicks to the upside. For longs, this isn't great. You want a position where there's wicks into demand. It's like a wick and then the body closes up like that. That's nice. You know what I'll do is probably cut it to like 1,000 contracts and then stack those bits.
What does it mean if you're stacking bids? It's just gonna take the best option when it comes to that
It it
price.
it improves your entry basically. So when you're stacking bids, you do it in an area which is market demand. Like, you know, basically where the market has traded this area as demand. So like, you know, you see a lot of buying going on. And the best confirmation for like um for seeing, you know, buying like actually going on in the market, right, is to use like order flow tools. You know what? Okay, this is what I use. Right. I think they're called like Kayotaka, I believe, right? So you could
Okay.
create like all these workspaces, right? So I have like a bunch of it. So what I'm gonna do is open new one, right? Let's call it alts. It'll open a new one. And you see like kind of like a default configuration, right? So now what I want to do is go to XRP. This one we want to be spot. I typically use Binance Spot. Obviously we'll kind of have to ignore the huge wick.
Mhm.
Bit annoying, but it is what it is. And then you got to configure your indicators. So what it typically is the CVD or cumulative volume delta for spot. And essentially what this allows me to do is see two things, right? When you see takers, which is usually algorithms, or when the market's chasing price, that's when it goes up and down like sporadically. Like, you know, down this all downtrend. You can like see, you know, when CBD is down with price, the market's chasing with, you know, chasing yeah, sells are basically chasing the market low. So they're like, you know, aggressively selling. And you can also see, you know, in the slow, like there's a lot of sell pressure. I mean like a lot.
I hear a lot of people talking about order book depth and etc. How does that come in play with trading opening positions, reading the markets, and etc.?
Order book depth basically tells you what the order book says, if that makes sense.
Okay.
Um, so you know what was super interesting here is I can actually maximize this for you. So you see like all these yellow lines and whatnot. This is yeah market liquidity. Whoops, wrong one. Single, yeah, okay, so it'll just be this ticker. Cool. And you can actually customize it, which is like super cool. By like the quantity. So this is like 440k XRP, and you basically just customize it to see the most important levels in the market. So it's not like too noisy, but you see like high liquidity, which is what you want to see. It's like a mil XRP. Or around that seems to be perfect. We can see some around the low. That's pretty important. As well as like on the way down, you can see the market was like really heavy in terms of bids. So market was buying this. Not like a whole lot, but they were buying. You can see it like in terms of the bounces being sold. You know, ask depth. That's basically
Mhm.
more supply towards price. You can see it above it, but also in these highs. That tells you basically, you know, it's passive selling. So you can
With
see
those
this
order book
bounce.
depth, does that kind of kind of give you a indication of what's gonna happen in the future? So if there's more buys, let's say a few hours will what actually. Like how do you read that? That's what I'm trying to.
Okay, honestly, I just keep it pretty simple. Like this ask depth basically tells me the market's more positioned to what's being selling, right? And then this is where it becomes useful in terms of like CVDs, right? So we can see price, grinding higher, passive depth, passive like ask liquidity, ask depth, however you want to call it, is increasing into this price action. We see CVD moving lower, right? So it's actually lower into this, meaning a lot of that like bid demand and momentum is basically just completely lost around like $3. And you can see that in price action. It just turns over instantly. It goes all the way back down. So that's like really good confluence as well. And then when it comes to absorption, what you see typically is CVD grinding higher, right? It's leading with price action. So this is all like takers, which is market buying. Typically, it's market buying because you have all this increasing ask depth. So it's, and you can see it with like the wicks, like all these wicks, yeah, right? And the increasing ask depth or increasing supply, and then CVD increasing with price, right? So then you're left with absorption at the high. So you get a consolidation like that typically. You get a spike in the CVD and then it turns down, and then you get pretty high ask depth, and then price reverses. Think of these two as like liquidity tools.
Okay.
So when the CVD is up with price, there's buying, right? When the order book depth is like red, right? So that's more ask the liquidity. Right, and the more red it gets, the more ask liquidity there is, the more sellers there are, right? This is a huge problem when it comes to price going up essentially, because the more supply there is, the more buyers you need, right? In like simple like ratio terms, if you have a lot of ask depth, you need like 2 or 3 to 1, meaning like 2 to 3 buyers to 1 seller to continue higher. So it becomes more and more expensive as price goes higher, and then eventually, it's just like an auction when you go to an auction for like a house, right? There's a point of exhaustion where the buyers no longer, want to offer essentially.
And then the kind of
That's
price.
yeah, yeah, sure.
Okay.
Yeah, so like the analogy of like a house auction, right? So eventually it reaches like a peak where like no one goes above that, and then sold, right? Think of prices like that. So can I actually like how do I remove these? I have to manually do it, I guess. Yeah. See, this price high and consolidation as exactly that. So buyers basically tap out, right? And we're seeing the buyers stepping in the entire time through the CVD and price action, growing high. And we see the sellers are just basically becoming more and more, right? So there was maybe 1 to 1, then there's 2 sellers to 1 buyer, then there's 3 sellers to 1 buyer, then there's like 5, then there's 10. And that has enormous weight on price. And that's why you see momentum die very quickly. And then when that happens, obviously sellers win, right? So the sellers then have what we call control. So then the sellers control price action, and that's why it goes down.
Okay. Yeah, I'm getting it better.
Yes. And then obviously, when you get like these, like big candles down, like almost a crash, not really, more like a sell-off, right? This is actually where you see most of these buyers, also like these buyers from this area, start to puke, as in they start to sell off at break even or minor loss. And that's actually why that's legitimately what's going on behind the scenes in terms of why downtrends start, is because the buyers, the last minute buyers, become the liquidity for lower. And when that happens, that's that change.
Yeah.
Yeah, yeah. And that changes the whole tone and whole mood of the entire market, like really quickly. So then those buyers from before become the sellers here. Makes sense if you think about it in terms of market psychology. Like you'll read about revenge trading a lot, right? It's a form of
Okay.
revenge trading because they were wrong over here, right? They made a loss here. They want to make it back, so they start selling on this bounce, right? So then that's when you get a lot of weight on price action, like a lot, and then that's why you get a much more aggressive like waterfall type sell off.
Ah, okay, that makes sense. So like the second dip is gonna usually be a little bit more of a
Aggressive.
some extreme aggressive down dip. Okay.
Yeah, it's
Makes
kind of
sense.
like when you go to a casino, right? And you have I think it's roulette. You have green, red, black, right? It's 50-50, just like price. 50%
Yeah.
can go up any moment, 50% go down any moment, right? And that's like red and black. So like, yeah, if you just think about like statistics, most people will, be split in the middle. Though there might be like 55% or 60% one way or the other. It doesn't really matter. But the point is, if that 60% is wrong the first time, they're going to flip to the other option, right? So then
Yeah.
when it comes to trading, right, that means you have an absolute value, meaning you have a huge majority that are on the same side at once, and that's what creates these really aggressive moves in price, especially on the downside, and then obviously on the upside, it looks exactly like this because the cells that were all wrong here start aping in um, up here.
Okay, interesting.
Yeah, that's why the price is like that.
Yeah, that makes sense now. Okay.
Great tool, by the way. I honestly highly recommend learning how to use market data.
What do you call it? What do you call it? Can you send me the link? Or
Yes. It's called Kayataka. I'll actually go to their site.
okay, yeah, that'll be great to just link down below in the description as well.
Yeah,
So go and try it out, play with
I
it.
believe it's free actually at the moment. It might become paid in the future, but essentially it's a market data tool for traders. So you can essentially see whether liquidity is in the market, where people are buying, where people are selling. If you use CVDs, then you can basically see how algorithms are trading it. Algorithms, I think, make up like 80 to 90%, I would say, like CVD flows, which is basically just market buying and selling. Which is pretty important because the market buying and selling becomes most of the momentum in the market. Like, when we go and like limit buy something, that's called passive. So that tends to be more, like the passive buying and passive selling leads to, the tops and bottoms. So like, right now, the low is set by a ton of people buying spot, um, which hypothetically is actually good.
Okay, so people buying spot is better than people buying lot or
Yeah. I mean,
what is the lot?
if you wanna like assume you're a bull, right, and you want prices to go up, the number one thing you want to see first is spot market buying price. Um,
Okay.
so yeah, I really like to go to BTC for this kind of thing. I'll show. So on the left we have spot, right? So we have Bybit, Binance, Coinbase, right? And we also have it on the heat map. Full screen up. And we can see, the bid depth is pretty good. It's persistent, right? And then obviously we see red here on this bounce. So we can see the market is moderately selling the bounce, which is kind of to be expected after a huge sell-off like that. You're going to see like a lot of people try to sell at break even. So there's going to be pressure on price for like a while. Yeah, but we can see, initial low, like this is the crash low, right? And then we see buy wall here. And we can see also, when price is here, we see that the confirmation of the actual buying is that bid depth spikes. So it went from like, like 50 mil to 115. And that difference when it got filled, You can actually see they did get filled because the buy volume here, 557 BTC. You can see the walls 200. So you can actually tell there was a limit buyer that was basically sneaking their way into it. So they're like quietly buying like quite a lot. That's a little alpha as well. Plus the confirmation being that bid depth spike, like here, right? Around the low, and then it drops off as price reverses. So yeah, like someone bought, like actually bought here. And then you can see the same here. It's quoted here, as well as like, you don't see any of that like really recognizable like yellow big buy wall, right? But you see that bid depth here, and you can see it like go lower as price goes higher, which tells you someone's passively buying into price. But they're trying to be like super sneaky about it. But if you actually look in the volume, you can see someone's buying clips of like 100, 145 BTC, like per candle, basically. So that would be
What
someone.
one person? Like one wallet?
It'd be a whale. Yeah, it'd be like one whale that is nibbling into price, and then they're trying to be quiet about it, because a lot of whales obviously don't really want people to know, especially in Binance. They don't want people to know that they're buying like a lot at this price because, like the way that like Bitcoin trades, especially now, is purely like around liquidity. Because it's such a huge market now, and you have a lot of people with like pretty heavy bags, right? When someone's buying a lot and these other big players get news of it, they will then go and use that buyer to then sell into to get rid of that risk. So it becomes like a constant change of hands. And
Okay.
this becomes kind of useful information, like way later on, because around tops, when you see that $1 billion inflow kind of days, it tends to be like perfect buy demand for supply. Like literally, as you can see, there's this constant sell pressure here, like all the way down. These are spoofs, by the way, like
Scoops?
these orders, yeah, spoofs. But it's like spoofing is basically an order which is placed for a limited amount of time and then pulled. They do it more often on spot because, so like they'll spoof on spot, which basically means they put a big buy order on a spot that causes algorithms to buy, which lifts price, right? When this happens, you want to be looking on perps because they only do that when they need to bail out of a position. This is around, oh yeah, it's here. So you can see it. That's 4. Yeah, you can see. So they're spoofing out. And then they're trying to get out of a short. And then they were like chasing it the entire way. Kind of funny. But yeah, anyway, like really, really solid tool to use. If you want to keep it simple, just use the heat maps, which tells you where the liquidity is in the market, and the order book depth. Like as you can see, the higher low that we had previously where it went long, we had consistently solid bid depth, as well as it was really, really clean in terms of price action. That there it is. That went draw across completely for some reason, but that high, which then broke and then went higher, like super clean.
Mhm.
I do think it's different here because this high, right? And then we have clear supply being quoted here, like ass liquidity, as well as ass depth, right? Which means the selling into this bounce. So that like this is probably like the relief move, right? So then now what typically happens is you have a defined range now. And this is good for like next week.
Okay.
Yes, again. Yeah. So call this like the range, roughly, I would say. I mean, maybe we come back down to the lows again because we didn't yet. Yeah. So this
So
could
to
be
work
the
at that
range.
lows, to get that low, you just wait to the lowest point. You don't take like an average of
No,
those.
you typically set it off where price respects it.
Oh,
So
okay, okay. Wait.
sometimes it's
Okay.
within the same candle, sometimes not.
Okay. It's like an instant up and down, or down and up, or whatever. Like an instant.
Um, no. So like the reason why I put a line here, right, is we can see it was respected here, and it's respected here too. So this is clear, like range high.
Yeah.
And yeah, it's pretty good. I mean, I set it at the low here because, yeah, maybe like these lows over the weekend, were just prematurely gobbled up basically by a buyer to sell into this.
Okay.
So this is where I'm trying to understand their kind of game theory per se, if that makes sense.
That does make sense.
Yeah. Plus, it makes it a little bit cleaner because if then price comes back up and consolidates above this line, it makes it a lot easier to take like a quick long scalp targeting this consolidation, like a sweep of it, like that, something like that, right? And then obviously you would set your stop loss below these lows here. So you would have like a limited downside. Yeah, like 1%. 1% targeting, um, yeah, at least like a 2% move. So again, like your return would be double what you're risking.
Yeah, that makes sense. That makes sense. Okay. And now that we have this out of the way, how would you read the news? I mean, especially now that we just witnessed this big crash that just happened. What's your main things that you look into when you trading based on news? When you think something's going to be super bullish, when you think something's going to be super bearish, um, is it majority of the USA like news, or is there anything else you kind of look into as well?
Good question. So we know the lead in news was tariffs, right? So what you want to do is basically go to account like this one, Walter Bloomberg, and you basically see what the tariffs are. So right now, like the news right now, which is Trump on trade, don't worry about China. So he's being basically told like don't be stupid, essentially. So and both Z and Trump have obviously big like egos, right? They think but they're better than each other. They both think their economies are better than each other. So it's the whole like ego fight thing, which you have to kind of understand with the psychology of world leaders. So we can see, within these headlines, don't worry about China, it'll all be fine, as well as other US leaders walking down, like basically um, de-escalating what led on Friday, which I think if we
Yeah.
go, might still have X meeting, blah, 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 have and canceled. That was like more de-escalation stuff. But like this was like the main one. US will impose 100% tariff on China.
Yeah.
Um,
I saw that in a bunch of headlines as well.
yeah. So what we can do is we can copy paste that and go to a chart and paste it. It's like,
And
yeah,
you've
this is delayed a little bit. But like, yeah, this was basically the push law that like crashed the whole market.
oh, interesting. Okay.
Yes. And then if I go back and get one of the other headlines, which was positive.
The delay normally between when people starts posting bullish or bearish news and the market reacting to it. Like, is there I'm guessing there's a very, very small time gap. But do you have any idea what's the like average time gap? Like how is she on it?
Average would be like, it depends. Because
Okay.
a lot of the selling and buying is done by algorithms that look for like keywords, basically.
Yeah.
You have, I would say on average, like 5 to 15 minutes before the market reacts.
Okay.
Like, like really, really reacts.
Yeah. Okay, so if you're a retail trader, it's like constantly be on your phone and kind of be open, wide awake every single day.
Nah, you don't have to do that. I mean, you can honestly just turn notifications on, like this account, to be honest. Yeah, I mean, it's crazy. Like in the years, like the 6, 7 years of me trading, honestly, I've never seen a more headline driven. Like not even COVID, like all of 2020 was this correlated to headline.
I think it's because more people is getting into DeFi and Web3 space.
No, I think like other admins are kind of predictable. They don't really go out of the typical bounds of like the kind of bureaucratic way of running countries, right? Whereas I think it comes down to the way the Trump admins like probably run. They're as well as like Trump being like very cannon fodder sometimes. Is it can just like randomly come out one day and say something, like on Friday where he more or less had a bit of a tantrum, right? And announced tariffs, 100% tariffs on November 1, right? Which is like 17 plus days away, right? That's still like a huge amount of period. That's still more than 2 weeks to negotiate, right? But the market basically took that as surprise. They didn't expect it. So then that leads to um everyone trying to de-risk at the same time. And when you get that, like
Yeah.
when you get that, you basically get price action like this. So this is all forced de-risking. And because of that, you get like a waterfall sell-off. And this obviously hugely impacts Bitcoin. And then when you have a really over leveraged alt market, you essentially get like a massive crash. I mean, we can probably see it from like look, Thursday, Friday, like huge impact on alts. I'll go back like 6 months. We can basically see, I believe like others have just dominated for like ages. So we can see from July, all that open interest basically got taken out. I mean, it's as low as, it's even lower than it was in June, like multiple months of open interest in alts has got like cleaned up. But like, again, you can see that there had been increasing OI for like so many months in others. It went up to like almost 40 billion. Now it's down to 21. It's more than likely lower than that.
Okay, so with this news that just came out with a 100% tariffs, um, like obviously I'm guessing if there's going to be any sort of lift, like let's say it takes the tariffs from 100% to let's say 80%, it's obviously going to mean that it's going to be way more bullish in the markets, or is it still going to have
Yeah,
a slight
yeah.
negative
So
effect?
it'll be bullish, but it'll also have like a negative effect on long term. So what markets will like essentially do, right? Is say market opens, it like opens a little bit lower, like kind of just chops around, or even just like straight up reverses because of the news. You'll likely get kind of a consolidation period where like price kind of
Yeah.
consolidates. Um, for like two reasons, right? The market wants confirmation that there's going to be a resolution, right? So like if you get a candle up like that, you won't really see like a lot of asset managers looking to cover shorts taken from higher, because they don't exactly trust the judgment of Trump Aussie, and they also know that they're in like a trade war currently. It's just a matter of, are things going to get more severe, or are they just going to go back to what they were like a month ago? And
Yeah.
yeah, if it goes back to what it was a month ago, then you see all this price actions grind down. All of that essentially gets, I guess, like backfilled in like simple terms, which basically means price grinds back through that. It's like all this lost value is essentially then filled by the market. So you end up getting kind of like a V bounce
Mm.
or a V recovery. That's if it's like a really, really good headlines and de-escalation. And yeah, I would say today, Monday, like Tuesday probably as well. We'll have
Yeah.
to see. We'll have to see. I'm really interested to see what futures are like when they open. I often just like kind of sit on hands and wait to see what the futures market does initially. Then I kind of connect, is this reaction justified with headlines, or are futures overestimating, or they underestimating? And I essentially use that as kind of the basis for like a game plan. Because if the headline's really, really good, but like futures is not reacting much to it, I think there's massive opportunity there to the upside because they're not realizing it. So like a distortion basically between reality and the market. That occasionally happens.
Okay, so S&P 500, like the futures, that's a good kind of gauge to also kind of read the news and kind of try and expect what's going to happen in the crypto markets. Is
I
that
would
what
just
you're
say like
correct?
generally for global markets, it does impact crypto as well. Because obviously Bitcoin's correlated to TradFi flows now. Um, which essentially means we're correlated to the ES, which is the ticker here.
Interesting. And then just to quickly go back to that news-driven, like bearish, bullish moments. So obviously, Trump just announced in 2 weeks' time the tariffs is going to start. Does that start date, like, how does that start date look more or less in the market? Like,
It's like a
is that
countdown if you think about it. So if this is where you're going to think more politically, it's a countdown, which essentially means the admin, the two governments and the diplomats have 2 weeks to come up with a proper resolution, which does not escalate to a like a severe trade war, right?
Mm.
Doubling down on tariffs is not good for trade. It's not good for relationships. It's just bad. Like there's nothing good about it. Um,
Yeah.
so now we have 2 weeks essentially to see resolution. By resolution, we want to see those tariffs cut down. We also want to see better trade terms and a proper trade deal come out of the next 2 weeks, which is essentially like China and the US put egos aside. They allowed trades like, chip manufacturers, chip creators, like ASML, I think is one. Um, and then like, the big companies like Intel, AMD, Nvidia, they all use, these materials, these rare earth materials,
Yeah,
mineral.
yeah, fair point.
And
Nice.
yeah, like they need it to make their products, right? And when they don't
Mm.
have that, and they rely off US politics, they rely off that leverage of the US to, get these minerals and ingredients that they need to create the products. If they don't have it, then like uh the obvious big problems, they won't be able to, ship on time. Inventories dry off. Like it becomes a gigantic disaster, and no one wants to see that.
Yeah. Yeah. No, no, I can just think forward for that. It's gonna be a mess.
Yeah, it's gonna be an extremely interesting next few weeks. This is last time tariffs occurred, right? I think it was exactly here where he slapped on pretty high tariffs. That's when it was announced, and that's where you saw that waterfall sell off because they were greater than everyone thought. But obviously it like bottomed out pretty much. And like this
Yeah.
huge move up was front running of insiders because they knew tariffs would come down. So if we're just talking in trading terms, what we want to see this week is basically the same kind of consolidation. If we see that, then like, easy. Then we'll get probably some kind of similar consolidation as well to this. The following week, and that's basically where you get in for like the whole Q4 like bull trade or whatever.
Okay, so normally just after this crazy news, you just kind of have to ride it out. You don't just dive head onto the market straight away.
Yeah, correct.
Yeah. Okay.
Yeah. If you're a bull, you want to see resolution. If you don't think there's going to be a resolution, then you want to see more fighting, basically, for sure.
Are you trading on a specific time, like on a specific time zone?
Usually, yeah.
Like, is this
So this is cumulative return by session, which basically tells you, who leads market basically in what session. So like blue is US. So typically,
Yeah.
the session you want to trade is the US session. That's led markets pretty much all this quarter. We can
Okay.
see, EU was pretty choppy. APAC started to follow as well, until recently, until like October, where
Apex? That's
early Oct was like a Chinese holiday as well, so that tends to be like kind of a dead period.
okay.
But like the best time to trade is European session, US session, pretty much.
There's just more volume in the market that time, or what's the main?
Yeah. There's always way more volume during US hours. There's a lot more momentum too, usually. But I mean, you can see like the US trend leads all the time, like top tier came all the way down,
Yeah.
and then since like April, basically US has been leading again. And then all the other sessions eventually gravitate towards the US. And then when the US like topped, so did EU, and then Asia obviously is probably going to lead this week a little bit, but then it'll go back to the US on like Wednesday. So pretty much mostly the US session is the best.
Okay, cool. Well, that was very, very insightful.
If you're ready to put in what you learn into action, head out to Wufar Pro and start trading with lower fees, deep liquidity, and pro-level tools. Hit that subscribe button for the next episode, and I'll see you in the markets. Peace out.